Most people think their money belongs to them. They work for it. They earn it. They save it. They see the numbers in their account. So they assume it's theirs. But one day, something strange happens. You try to send money. You try to pay. You try to move it. And suddenly, it doesn't work. No warning, no explanation, no countdown, just transaction declined. No reason given, no button to press, no human to talk to. Just a wall. And on the other side of that wall, your own money. At first you think it's a glitch, bad signal, wrong password, system error. So you try again, declined, again, declined. You refresh, you restart, you log out, you log back in. Nothing. And slowly, a feeling starts growing in your chest. Not confusion, fear. Because for the first time in your life, you realize something uncomfortable. You are asking permission to use what you earned. This happens to millions of people every year, quietly, individually, without headlines. A freelancer whose payment gets frozen, a traveler whose card stops working overseas, a business owner whose transfers are under review, a regular person who suddenly can't pay rent, same message, same silence, same helpless feeling. And here's the disturbing part. In most cases, nobody broke the law, nobody did anything wrong. There was no crime, no court order, no police, no judge, just a system decision made somewhere, by someone, or something you'll never see. Banks don't call it freezing. They don't say blocking. They don't say control. They use softer words. Review, compliance, security, risk. Words that sound responsible. Words that sound protective. Words that hide what's really happening. Power. Because when your bank says no, they're not asking you. They're not negotiating. They're not explaining. They're deciding. And you are expected to accept it. Most people never question this. They assume, well, they must have a reason. I'm sure it'll be fixed. It's just temporary. So they wait. Hours, days, sometimes weeks, while their bills stack up, while their stress grows, while their life pauses, all because of a silent decision. But what if I told you? This is not accidental. This is not random. This is not rare. It is built into the system on purpose, by design. Modern banking is not just about storing money. It's about monitoring behavior, tracking patterns, scoring risk, filtering people, approving or denying access. In real time, every second, every transaction, every move. When you swipe your card, a process starts. Invisible, instant, relentless. Before your payment reaches the store, it passes through layers of rules, algorithms, databases, blacklists, watch lists, risk engines, all judging you in milliseconds. And if anything looks off, even slightly, the system doesn't ask questions. It reacts, it blocks, it pauses, it flags, it locks. You don't see this machine, you don't hear it, you don't vote on it, you didn't agree to it, but it watches everything. And it has the power to say no. In the past, if a bank froze your money, there was usually a clear reason: court order, debt, fraud. Today, it can happen because you traveled, you changed devices, you bought something unusual, you sent money to the wrong person, you triggered the wrong pattern. That's enough. No crime required, just suspicion. Generated by code. And the worst part, you will almost never be told the real reason, because banks are legally allowed to stay silent. In many cases, they are not even allowed to explain, by law, by regulation, by internal rules. So when you ask why, you get security reasons, policy, compliance, a polite version of, we're not telling you. This is the hidden reality of modern money. You don't control it, you access it conditionally, temporarily, as long as the system agrees. And once you see this, you can't unsee it. Because suddenly, every payment feels different. Every balance feels fragile. Every account feels rented, not owned. The system did not appear overnight. It was not created by accident. It was built slowly, carefully, step by step, over decades. To understand it, you have to go back. Not to smartphones, not to apps, not to online banking, but to paper, ink, ledgers, and locked vaults. For most of history, banks were simple. They stored money, they moved money, they lent money. That was it. They did not monitor behavior. They did not score lifestyles. They did not analyze patterns. They did not run algorithms. They followed rules written by humans. If there was a problem, a person handled it. You could walk into a branch, look someone in the eye, argue, explain, negotiate. There was friction. There was humanity. There was accountability. Then the world changed. In the 1970s, 1970s oil shocks, inflation crises, currency instability. Governments were losing control. Banks were under pressure. Financial systems were shaking. So they began modernizing, digitizing, centralizing, automating. Computers entered finance. Databases replaced paper. Networks replaced couriers. Speed replaced deliberation. Efficiency replaced conversation. At first it looked good. Transactions became faster. Errors dropped. Costs went down. Everything seemed better. But something else happened. Power concentrated. When money became digital, it became traceable. When it became traceable, it became controllable. Every transfer left a trail. Every purchase created data. Every account built a profile without you noticing. Then came the 1980s and 1990s. The rise of global finance, cross-border flows, offshore accounts, international crime, drug money, tax evasion, terror financing. Governments panicked. They wanted visibility. They wanted oversight. They wanted leverage. So they created regulations, massive ones, complex ones, invisible to normal people. Know your customer, anti-money laundering, counter-terror financing. These sound harmless, responsible, protective. But they changed everything. Banks were no longer just money handlers. They became enforcement partners, surveillance nodes, risk managers, digital gatekeepers. They were told, you are responsible. If bad money moves, it is your fault. If suspicious activity happens, you pay the fine. If regulators are unhappy, you suffer. And the fines were brutal. Billions of dollars, careers destroyed, licenses threatened. So banks adapted, not by hiring more humans. That is expensive, slow, risky. They built machines, software that never sleeps, systems that never forget, programs that never hesitate. These systems analyze who you are, where you are, what you buy, who you pay, how often, at what time, from which device, from which location, everything. And then they score you, not publicly, not transparently, not fairly, secretly, continuously, automatically. Every person becomes a risk profile. Every account becomes a probability. Every transaction becomes a test. Do you match the pattern? Do you fit the model? Do you behave normally? Do you stay predictable? If yes, access continues. If no, access pauses. No meeting, no discussion, no warning. This is why your bank can say no, because long before you press send, the system already decided. By the time you see declined, the verdict is old. The judgment is done. The file is closed. And here is the uncomfortable truth. No employee wants to help you. They cannot override it easily. They cannot explain it fully. They cannot challenge it because they are controlled too. Front desk workers, call center agents, managers, they see only fragments, only codes, only templates. They are reading scripts written by compliance departments, approved by regulators, designed by lawyers, optimized to protect the institution, not you. So when they say, I am sorry, we cannot share details, they are not lying. They genuinely cannot. This is modern finance, not built for trust, built for protection, not for individuals, for systems. And every year, it grows. More rules, more monitoring, more automation, less discretion, less flexibility, less humanity. It usually begins quietly. No alarms, no headlines, no warning, just a screen and a message. Transaction declined? At first you think it is a glitch. Bad signal, wrong password, temporary issue, nothing serious. So you try again. Declined. Again? Declined? Then you check your balance, your money is still there. But you cannot touch it. You call customer support. You wait. 30 minutes, 40 minutes, an hour. Finally, someone answers. They sound polite, calm, professional. They say, for security reasons, your account is under review. You ask why. They say, we cannot disclose details. You ask how long. They say, several days, possibly longer. You feel your stomach drop because rent is due, because bills are coming, because life does not pause, and suddenly you are trapped. This has happened to millions of people, quietly, without news, without lawsuits, without apologies. In 2019, thousands of small business owners in the United States had accounts frozen, not for crimes, not for fraud, but for unusual activity. Many were selling online. Many used PayPal or Stripe. Many depended on daily cash flow. Their money was locked for weeks, some for months, some never fully recovered. Businesses collapsed, families struggled, employees lost jobs. In Canada, 2022, during protests, bank accounts were frozen, without court orders, without trials, without convictions. People could not buy food, could not pay rent, could not move money. In China, digital wallets have been frozen remotely. Citizens have been blocked from spending, not because of crimes, but because of risk indicators. In Europe, banks have closed accounts of journalists, activists, immigrants, entrepreneurs, sometimes with no explanation, sometimes permanently. This is not theory. This is not conspiracy. This is documented reality. And it happens because the system prefers false positives over missed risks. In simple terms, it would rather block 10 innocent people than let one suspicious person pass. So it overreacts, it tightens, it locks, it delays, it freezes, and when it makes a mistake, undoing it is slow, painful, humiliating. You submit documents, you send IDs, you upload selfies, you write explanations, you wait, you feel guilty. Even when you did nothing wrong, you feel powerless because you are. This is the new relationship with money, permission-based, conditional, revocable. You do not own access, you are granted access, temporarily. As long as you behave correctly, as long as you stay inside patterns, as long as you do not confuse the machine. And the machine is not smart. It is statistical. It does not understand context. It does not understand emergencies. It does not understand life. It sees numbers, ratios, deviations, anomalies. You're not a person to it. You are a data point. This changes how societies function. Slowly, silently. People begin to self-censor, self-limit, self-restrict. Not in speech, in spending, in movement, in choices. They avoid sending money abroad. They avoid helping strangers. They avoid controversial causes. They avoid risk. Not because they disagree, because they fear flags. This is soft control. Invisible control, psychological control, no police, no arrests, no prisons, just access management. And once a system like this exists, it never becomes weaker. It only grows. More rules, more monitoring, more automation, more integration, with governments, with platforms, with databases. Soon, your bank, your employer, your insurer, your platforms will all share signals, risk scores, flags, histories, a financial reputation that follows you, quietly, permanently. So the real question is not, why can my bank say no? The real question is, how much power should any system have over human survival? Because money is not luxury, it is food, it is shelter, it is medicine, it is mobility, it is dignity. When access to it becomes conditional, freedom becomes conditional, and most people will not notice. Until the day, they are the ones locked out. If this opened your eyes, if this helped you understand how the system really works, if you want more deep, honest breakdowns like this, then consider subscribing, not because of algorithms, not because of trends, but because understanding money is one of the last forms of real independence left.